Good morning. Good morning. Good morning. Good morning. Morning, Chris, Greasy, Max, Jeremy, Rich, David, Shadow. How's it going, everybody? Another 10 a.m. news event pending home sales. We had GDP and unemployment claims this morning. How's everybody doing? Good morning, Corey. Just marking a couple things here. Finishing up my new day opening gap. Let's see where right here. Okay. I had to get that there. A little new day opening gap right here. We had the close yesterday afternoon, then the open here. Let's see. Let's take a peek at the 1 hour real quick. Yep, there's a nice 1 hour gap there. All right, so 1 second. Let me check for this opening range gap. We had the open there. We had the close down here. Opening range gap. We got 213.50 to 340. It's about 213, 313, about 120 points. So may or may not close this gap today. We might actually see it run up and fill this gap from 2 days ago that it never filled. So let's go ahead and jump into my framework for the day. As you can see, price ran down still, and we rebalanced. We had an immediate rebalance of that potential fair value gap yesterday. However, we still closed down. Still had a down close bar for the day. But as you can see, we're reaching up. So at this point, I'm a little more biased to reach up, fill this opening range gap from the two couple days ago. It's Thursday, so we've been pushing down. So Thursday, Friday, we could see a little bit of a retracement reversal on the daily chart. So we may see it reach up into here, hit that daily fair value gap. That might happen. So I'm going to kind of lean towards that at the moment on the higher time frame here, that we may reach up into that, hit this daily fair value gap before heading down. So we'll see. We'll see if that happens, because we had the open here, then we reach down. Now we might have a push up and then a close. We'll watch that and see, but that's kind of my analysis on the daily right now. 15-minute chart, as you can see, we still have this area down here that we did not break through yesterday, which is previous day low, yesterday's low here. Then we have that. So at the moment, this is going to be kind of my sell side liquidity, this 15-minute fair value gap here. We have my buy side up here, that area of smoothness that we did not take from Wednesday where we had that sell off. So now we created this relatively equal high here. I believe we're going to come up and take these highs. And then right here, I have a minor sell side liquidity where price, see all this smoothness here? Right here, well, 845 bar, which this was derived, it closed 845, so this was derived from the 830 news, reached down and swept all this sell side liquidity and created a little bit of this would just be a minor sell side here, this low. And watch that as a minor sell side. But then we have all this smoothness up here. I think we're going to head up today. At least this morning session, I'd be looking for a move up. Doesn't necessarily mean I have to have a long, but that's kind of what I'm looking at there. And then we have the, let's see, where's that new day opening gap? A new day, kind of can't really see because I have the opening range gap here in the way for today, because we gapped up. I might need to change that color of this new day or this opening range gap. It's kind of need something a little more bolder. But let's see if I throw on the quadrants here. Where's my 75? There we go. Right here. I wouldn't need price to go between the middle right here and this upper quadrant right here. Let's see if I can mark that. Morning, Steve, Benton, Tyler. Good morning, Carolyn. No, I don't think we sweep below first. I mean, we could, but I don't think we do because that opening range gap from today is larger than it's about 120 points. I didn't calculate it completely, but it's roughly about that amount. So I'm looking for it. It may not sweep below. I'm looking for it to go up first, probably, and then come down. But today, I don't think we, or at least in the morning session, we come down into this opening range gap, the new one from today. At least not through lower than the midpoint of it, between the upper quadrant and the midpoint of it. Right. Yeah, David. The upper. So you can look at the high of it, and then if it does reach down, the upper quadrant, if you split the gap in four, the upper quadrant, and then the midpoint of it. Now, obviously it's not guaranteed it doesn't come down, but that's kind of, I would look for price to touch this area. And I think, and I have better targets to the long side today. So I would like to see a move down first into this area, and then take a long. I mean, I'd prefer that, but let's see. Let me mark the date from this opening range gap we have that it never filled from the other day. Let's see, what date was that? Tuesday, the 25th. That way, if I have to leave these on here, $225. And we don't start getting confused with them if I have multiple opening range gaps left open. And then I'll start cleaning up at the end of this week some of these older new day opening gaps and stuff that I don't need anymore, even though on my trading chart, keep them on other charts. All right, now we're hitting that upper quadrant. In this 15-minute gap. And that's what I prefer, actually. Like I said, is I move down first and then it to come up through buy side. Morning, David. Good to see you. David Crisp, since we have another David now in here. Good to see you. Good to see you. Been a while. David, I don't know if you've seen any of my live streams or YouTubes or anything lately, but since October of 2023, I have not been trading with Apex Investing or Sniper System or anything. If you could probably tell by my chart. So today I was actually looking. I didn't get a chance because I was running a little behind. All right, we're hitting the midpoint of that opening range gap. We're at that minor sell side liquidity. This area, I would love to see price start moving. Looking for the reversal. However, because I'm still bearish overall, it may not. It may not. But we got this close to this daily fair value gap up here today. I mean, I kind of anticipated reaching up there, but hey, we'll see. It's nothing, we just got to read and see what happens. But yeah, hey, Oracle, good morning. But yeah, I was trying to look and look at my accounts and everything and see if I'm going to go back to my normal sizing. But didn't quite get a chance today, so I guess I'm just going to stick to the sizing I've been doing. Especially if this week's been kind of for me, my model in the market, it's been kind of wishy-washy. Obviously, yesterday was my first trade of the week, so. But while we're sitting here, remember, 10 a.m. news, still early. It's moving in the direction that I do prefer before looking for a long. However, you can see we are reaching that opening range gap low, which it is fine. It is fine. It's just you got to know the probabilities whenever. Here, let's see. The low of that was 213.50. One second. What was the high? 340.50. So it was 127 points, that opening range gap. So the probabilities are that it won't trade back all the way through it, which it did today. But in most cases, it won't. And then on the other side of the scale, if it's under 120 points, then the probabilities are 70% of the time it will trade through it. So you just got to know the probabilities. And that's what I always, like to remind. When there's a probability, there's the other side of the probability as well. We can't think, oh, this should happen, so it's 100%. No, if it's 70%, that means 30% of the time it won't happen. Again, as I said yesterday, if my win rate's 60%, 40% of the time I'm losing. And actually with that loss yesterday, so for the month of February, I was at like 66% win rate. And I told y'all, I hover right around 60% is what I stay. So with that loss yesterday, put my win rate for the month of February at exactly 60% on the dot. So it's just the way it works out. That's why whenever I have some losses, like let's say it's the start of the month, and those losses put my win rate at like 30, 40%. I'm not worried because I know the averages tell me I have enough data that by the time the month is over, I should be around 60%. But yeah, we are having a nice sell-off here, so we just got to let it run. Or for me, I just let it run. Y'all know my rules. I let it run. I let it draw. And then look for my entry. Let me go ahead and mark my first presented opening gap. We have a little one here. Guess I'll mark that one here. It's my first presented fair value gap. Small, but I like this one. I'm just going to look at this area here. Curious about ICT, David? Yeah, it's been game changer for me. Absolute game changer. And like I've said before to people that ask me, well, you know, comparing Apex, investing, sniper, and all that to ICT, I think it's somewhat apples and oranges conversation. But for me, what really um, I love about ICT is I know why things are happening in the market. With the sniper system, you know how to read the market based on the order prints and everything that you see, but you don't know why those order prints are derived. Like what actually created those order prints. With ICT concepts, you know why things are happening. So you're never really at a point where you're like once you know it. Obviously when you're learning it, you'll have questions. But once you know it, you're never really like, why did that happen? It's like, oh, I see why that happened if you didn't see it already before it happened. Let me see if I can. So you see how we reached right down into these 15-minute gaps here, hit the midnight opening price. Hold on, let me go back to the 15-minute chart. I have this sell side liquidity here, but we have all this imbalance. It does not need to run through sell side if it's going to go long. It does not need to. It just needs to reach down to internal range liquidity, which we have here. So it drew to liquidity. Now looking for that reversal, and it's almost 950. And we have an inversion right here. So I will monitor this inversion and see if it builds support right here. It closed that opening range gap. So, hey, cool. London low was right here as well. So it could be sweeping London low, hitting this internal range liquidity. And then you just got to wait to be sure this is done with its draw to wherever it's drawing to. And like I said, if it draws lower, well, where could it go? It could go to the sell side. It could go to this 15-minute fair value gap. It could go to previous day low. And if it just keeps going forever, I don't get a trade. Because I have a clear area I believe price could go up above. And I do have areas below. But these days where we just open and sell off, like this could be turtle soups, but I don't trade turtle soups. Like I think every day there's been a turtle soup and you just sell off with it. But to me, we have a lot of reasons price could come up higher before that continuation. Because I think we are going to continue going lower and lower. We still have all this sell side liquidity down here, sell side liquidity here. We have sell side. Like we have a lot of I don't think it's crazy to think we're going to get into the 17,000s at some point. I don't think that's crazy based on reading. But we'll see. We'll see. So you see that inversion did not build support there. So I'm not worried about that inversion anymore. And this blue up candle may actually be a bearish order block if price continues to go down. So I'd be watching the opening of this candle right here, and see if that holds some resistance for price, and then the middle of it, if that holds resistance. And I'm not looking to go short. because, it could stop here. It could stop here. There's a lot of areas it could stop. So I don't have clear, you know, and it may not, like I said, it may not run all the way up. It may not come up. So I just wait. It's 9:50 now. It's still super early. Getting a breaking. When was this said? Apparently, Trump says Mexico and Canada tariffs on March 4th. China to be charged an additional 10% tariff on that date. That's headlining Financial Juice right now. So I don't know exactly when that was said, but that could also be a reason for this sell-off. See, it's just headlining right there. So I'm not sure when that was said. Oh, here we go. So this was like around 9 a.m. It looks like 8:46. So and like I said, we still have that 10 a.m. news. New home sales, I think is what it was that I saw. Pending home sales. So it won't rock the market, but could give a pop in volatility a little bit. So just have to be aware of it. At this point, yep, look, see, we're hit that sell side liquidity. Yeah, we have that GDP and unemployment claims at 8:30 as well. So we shall see. All right, approaching that 15-minute fair value gap now that we traded into yesterday. We actually traded all the way through it, just never closed it on the 15-minute time frame. See, we closed in the lower portion of it, but never closed it completely. So hey, we may be getting ready to sweep, just continue down. Take out yesterday's low. See, and this is in these cases where we have the sell-off. Just like I said yesterday, once we have a move that looks like this and we just go down and we're just blowing through areas that I'm looking at a draw to and a shift from, and it just keeps going, at that point, that's when I don't expect it to come all the way up again. It could, but I lower my thinking of it coming all the way up. And what I do is I just look for pullbacks to areas now, not all the way through anymore. Look for pullbacks through 2 areas. So if we get a big 15-minute fair value gap here, I'll look for price to stop somewhere, a reason for it to sweep or draw, and then look for it to shift back and pull back to some of that internal range liquidity somewhere. That's what I look for. I want to clean some of this up. I'm going to clean. Hate when it gets so messy. Clean all these little ones up. See, now we have nice smoothness up here, nice smoothness up here. We have this down here. So we could be sweeping it and look for a pullback. However, I don't think we run all the way back up. We might, but not during my morning session. I have 5 minutes till news. Here's that swing low here. Now we're sweeping yesterday's low, or maybe blowing through it. We'll see. See, and right now, set A4. Oh, and right now, these are times where, I mean, not saying there's not. I mean, I'm sure there's good trades depending on your trading style or whatever, but you just got to be cautious. Like, there's a lot of pretty good volatility. I mean, we're down almost, I mean, a few hundred points very quickly within the first 30 minutes. So it's very easy in this time to get caught up in the emotions of trading and the volatility, where if you're offside or you go the wrong way, you know, you'd want to get it back quick because you see price just going one way, another way, and thinking you can do all that. So just gotta be careful. We do have this 5-minute fair value gap right here. 2-2. Okay. And get rid of this opening range gap here. Clean up those lines a little bit. Hey, if we just keep selling off, then I do nothing. Get rid of this little sell side liquidity line. Well, no, I'll leave it there in case price does come up. All right, so at this point, where could we go to? We could probably reach right through this daily swing low. We go to the higher time frames now. Start looking. There's the 1 hour. Taking these lows on the 1 hour. You see up here, I mean, it's pretty clean, but doesn't want any part of it. Still got an hour before this bar closes. Go to the 4 hour here. Yeah, not much else to really watch other than all of these lows where sell side liquidity will be hanging out at. So mark this little low. Oops. So now I got a 4 hour swing low and a daily swing low marked on my chart just to kind of see what it does. What a sell off. And see, that's the thing though. Even if I wanted to short, there's not an entry for me. If I have no entry, there's no trade. The only entry would have been a turtle soup, which I definitely don't trade those because I Definitely don't trade those. Let's check. Let's see. Here's the monthly. I don't have anything on the monthly. But of course, it doesn't give me a lot of data. I just have this volume imbalance here. Like, how far back is this? December 23rd. That's as far back on the monthly it gives me. But we have last month's low approaching as well. Check the weekly. Yeah, I mean, there's this up bar right here could be a potentially bearish order block on the weekly if we get a close underneath. Turtle soup is basically when price pops up through, like a buy side or something, and then you get a candle close immediately the other way. So like if you would look at all these highs up here, like you have this high, and when price popped up through all the highs here, and then this next candle closed below this last up candle. As soon as that candle closes, you short right here. But the thing is with turtle soups, so it's basically turtle soups, you're looking for just a pop through like some sort of liquidity, like a buy side liquidity or internal range liquidity or something, a pop up through something, and then you immediately short, or vice versa. Pop down through something, immediately long. But you really have to know what you're doing with those, because you have to really have a good target and reason why it would go the opposite way, because that's like that. The turtle soups are the earliest entries for ICT, like the absolute earliest entries, because as soon as this pops up through, and then you see a price like the next bar close below that high, that up candle. As soon as that closes, boom, you go short. But you'll have a smaller risk because it closed here at 347. Your stop would be up here at the high. Well, in this case, it's still 30 points, but typically you're going to have a smaller stop, and you're in at the earliest entry point. But you gotta really know what you're doing, because if you're wrong, obviously there's nothing else. In this case, we had this fair value gap, and then it created a new one, so that's actually pretty nice. But yeah, it's tough for sure to know exactly, because I've watched them and I've looked at them, and I'm like, is this a good one? This is a good one, and I'm kind of like, it's like you really, 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 really have to know what you're doing. Your higher time frame. Oh, so MNQ1 is gonna just show all the forward contracts, and so I stay on. I actually like am on the current contract, MNQH 2025. Like I like to make sure I'm on the current contract. All right, so I'm watching this right here to see if we invert it. We have that news is out already. It already came out. See if we get this inversion. And if we get this inversion, it's going to be the first. See, we have these swings here. If we get this inversion, that's going to be the first signal that we potentially could be coming back up to somewhere. Which there's also a 5-minute fair value gap right here as well. So let me go to that. So I would like to see price trade through that as well. Like I don't want to see it show any type of resistance in here. If we can start trading through it, then okay, we may start heading up. This 15-minute, this is an inversion. So let me put it as an inversion to see if it's going to hold as an 15-minute inversion or not. Back to the 1 minute. And now we have potentially a dealing range here for the morning. High, low. I'll measure it out. Right here's equilibrium, 138.75. So basically, if I got a trade, that could be a target. There's no, we have the 15-minute. Here, let me go to that. We have this 15-minute fair value gap, which, hold on, let me erase this 5-minute one first. I don't like too many things on my chart. So we have this 15-minute one. The 930 is the opening bar, but it's there. Don't know if we really pull all the way up to that, but here's equilibrium. And we have this fair value gap right here. First imbalance above equilibrium. Right there. Right above the midnight opening price. So just looking for potential targets if price does go on a pullback. Now, obviously, if it goes lower, then this dealing range will move. But I know now the equilibrium is right at the high of this 15-minute inversion. And then I have this little fair value gap as the first imbalance after equilibrium. So I can get rid of this. And now that I'm looking at this too, if you look on the 15-minute, look right here. These two highs, relatively equal highs, and right here, 930, boom, swept them and dropped, leaving some buy-side liquidity right here. So it may not return today. I just hate the days that it just opens and sells off. So that would be right here. That's where that turtle soup is. Right here. Popped up through it, sold off. There's still, even if I wanted that and was looking for a short and wanted a short, there was still, for my model, no entry. Because we had this inversion, we had this fair value gap, but it never touched it. It just sold off. So there would have never been an entry for me. And because today's Thursday, we could see a move or an entry later in the morning. Because, typically I'm done. If I don't see anything around 10:30-ish, then I call it. On Thursdays and Fridays, that move could happen around the 10:50 macro, 11 o'clock, even between 11 and 12. It could happen. I won't be on for it. I still don't stay and wait, but just mentioning it could happen. Now, we do have a little swing we created here. So, and a little pullback. So we'll see if we can take this swing and displace up through it, leaving an imbalance there. invert this and create a new fair value gap. And all of this would be low resistance liquidity conditions because it left all these gaps and left, it's very clean. Yesterday was high resistance, as we can see. Today is showing low resistance conditions. So we got this close. I'm going to be looking for an entry here pretty soon. If we get this fair value gap, this may be my entry. This would be there's potentially some bullish order blocks here. But yeah, if we get this, I do like it digging up through this 5 minute first. It would be nice for it to come all the way up to the top of this 5 minute before returning down into this fair value gap. That way it'll basically rebalance this 5 minute, pull back here, and then long it from there. And like I said, let me see, from here, 10 to here, 30, 30, that's 30 points. Okay, so I'm going to watch this. And I will be going long right here. Most likely. Going long right there.
Order filled.
08. Oh, that's a pretty big stop. Ooh. So we shouldn't return back down. I'm going to go put my stop right underneath the midpoint of this inversion because it's a pretty big stop. 10. And really, I don't need, but if we can just get right up into here, I mean, this is a lot of range. So I'm going to go for, I'm going to go to the bottom of this inversion for low hanging fruit here. Because that'll still be a 60-point trade.
Order submitted.
See if we can get up here. Test out previous day low. Yeah, that'll be a nice looking win if we can just get up right up here. It may keep going, but there's no need for me to hold out for that. There we go. And I'm out. That was an easy peasy. Nice, beautiful trade there. Almost 10 grand. And as y'all can see, why money? See, and here's why I took it to right here. It may keep going, but this was a very important and big 15-minute fair value gap. So when it inverted it, I expected to come to it, but it could stall and accumulate right inside the lower half of this 15-minute inversion. That was a pretty nice, decent trade there. 60 points. I have no, and like I said, my goals is to take a trade between 35 to around 60 points. If I have room for that and I have reasons to get out, then I do. I just take it like this was 61 points. That's all I need. I'm good. That's it. Because I know, if this inversion wasn't here, I would take it. I would try to take it higher. But with this inversion here, and you see this little fair value gap right here, it could pull back, right? It could pull back. It'll probably still go. But if I have 60 points, why do I want to sit in a pullback, a potential area where it could pull back just to keep going up? You could. If that's your strategy, great. You could. But I got my 60. I'm out. And as you can see, this is why it's very important to follow money management. I can't stress it enough. Absolutely can't stress it enough. This is just under 10 grand, 9,500. And I did not get to increase my contract size to my normal sizing. I was debating on it, but because I didn't, look at it and I didn't want to just do it. But so this would have been almost a 20 grand trade. However, as y'all see, yesterday I took a loss. These are my first two trades. It was only 3 grand, right? So as long as your wins are more than your losses, and as long as you win more than you lose. So over 50%, you're just going to make money. You're putting probabilities in your favor. Yeah, I agree. John, this was a easy, easy, easy trade. Like we got in, or I got in. I don't know if anybody else did because you're not supposed to copy my trades. I got to put that out there. But anyways, got in, and I don't think I was ever in a losing position. Like I said, this is probably still going to go up. Like I'm not. If you're holding this, like that's fine. If you're in it, just keep your. If you're up 60 points, don't give it all back. Move your stop. Move your stop to somewhere where you can at least collect 40 points or something. You know what I'm saying? Like, because we do have this inversion and price could play around in the lower half of this inversion. And until it closes or trades in that upper half, I can't have the opinion of it continuing up yet. So I would definitely have a tighter stop. I would definitely want to keep it somewhere, because you don't want to give back. Don't want to give back. So, yep. Like I said, low resistance liquidity conditions. Yesterday was a little bit of a gamble. We were in high resistance. I kind of took a gamble. It was low risk, and that's a little bit of my downfall still is sometimes I'll see an opportunity. I'm like, ooh, like I know this is not the best setup, but I think I can grab 35, 40 points out of this. And then it loses like yesterday. Like should have just probably not taken the trade. But that's also why my win rate stays around 60%. I really think if I can eliminate that part of me, I could keep it up to 70%. But hey, it is what it is. Good job, everybody, whoever took this trade. And this is what patience does. Patience does this. Didn't trade Monday, didn't trade Tuesday, got a little bit of a risky one yesterday, traded today, still going to have a great week. And I cannot have a unprofitable month. My February, last day of February is tomorrow. Win or loss, stick in my plan, stick in my money management. I had a great February, considering I've only traded like half the days. Yeah, if y'all don't mind hitting that like button, it definitely helps the channel. Like I said, I'm here to make money trading, but I do feel like I show a side of trading that not a lot of YouTubers show, which is the patience, the discipline, and the following the money management, not blowing accounts. And I do that also because not only do I feel like that's how you should be trading, but that's how you should be trading your own live personal account. And I don't want to be here just for the prop firm phase. Who knows in 5 years where prop firms will be, or 10 years. If they're not around, I still want to be around. You know what I mean? So that's okay, David. Like, you're not being greedy if you're reading the market. That's what I say. If you're reading the market, you're not being greedy. But you want to, because this very well could just keep running up, and it's not being greedy because it's a possibility, right? Where being greedy would be is if you don't move your stop. In my opinion, if you don't move your stop, if you leave your stop and you're like, I'm just going to let it go. I got to get more. That's where you start crossing the line into greed. However, if you see, here, let's do this. This is how you trail a trade. Okay. You see this little bitty fair value gap? It's a little bitty, but you see it. You see this reach down, right? You see where the bodies are closing. My stop would be right here under this wick. And now you've locked in 40 points, guaranteed. That's where my stop would be. And then you could let it run. Let's say it comes up and inverts this fair value gap, leaves a new one. You move your stop under. I don't like moving my stop if I trailed. I've done this in sim just to practice, but I don't like, as soon as it creates a new PD array or inverts one, I don't move my stop right then. I wait until it touches it and tests it again, and I see that it held. Once I see that it held, and continues, then I move it. Then I keep moving it. Then I keep moving it. And that's just great management. That's just great trading. If you do that, that's not greed. So just want to let you know that. Let's see. What else? What little big greedy. Got it. Jeremy got 50 points on one contract, then stopped out at 36 on another. Hey, nope. That's fine. That's good. Taking partials. Do you know if you can somehow copy Top Step X? You cannot copy Top Step X that I know of. I'm not very familiar with it, but I believe their platform, that type of account on Top Step X, you can't copy it with anything. Can I put the link out again for the ICT video I talked about a few days ago? Which video? What was it about? Because I do remember I put some links. I did put an ICT video link. I just don't remember what we were talking about on that one. A-Train said, great point. I see others with a below sum accounts to get paid on other strategy. And I keep thinking to myself, these people relying on exactly. Which, hey, I get it. If people do that and, it's getting people paid. That's for sure. I've seen people get some big payouts. But I've tried to not fall in love with that because my thing, and part of why I came to ICT concepts and not needing any indicators, all that, is because I don't want to rely on anybody. If everything failed and the market's still around, I want to still be able to have a skill and a way to continue trading and making money regardless of relying on anything. All right, and you can see here, we're going up. So if you had your stop under this swing, it reached down, it'd be fine. And now we're displacing up. If it closes above the midpoint of this 15-minute inversion, that would be an area you can put your stop below. That would be an inversion right here. And then it'll create this fair value gap. And then I'd be looking for it to not trade back below the midpoint of it. So a stop below the midpoint of this inversion would be just fine. Then that'd be about like 103. You'd be at almost locking in like 95, 97 points already right there and just letting it go. And I never worry and look at these and say, oh, if I stayed in it, no. Because base hits, 35 to 60 points have gotten me paid over and over and over and over and over. So I don't care if this keeps going. I don't care. Don't care. Saturday gem video. Oh, yes, I remember. Here, hold on. Let me go to my YouTube history and see what video. I know what you're talking about. I just don't remember the exact name. Crap. Of the video. But I know the video if I see it. Hold on a second. Let me go. I cleaned my computer. Like, I did a nice cleaning of it. So it erased all my not saved links, but you know how if like you're in Google or whatever and you start typing and it'll autofill? Like, it cleaned all that out. So I gotta. Hold on. Let me find. Videos. It was. There it is. Yeah, this video is amazing. It's the algorithmic price delivery continuum is the name of it. Let me drop it here. Boom. That video right there is beautiful. Wonderful video. Oh, David. Yeah. Yeah, that's also why I like to trade, and that's also why I don't have a bunch of other prop firm accounts and stuff too. Again, not saying anything's wrong with that, but I like to have. If I can't copy them all together, I don't want it because I just look for one shot, one kill every day, and yeah, because once this move is done, then that's it. Like my framework's done, everything, my analysis done, everything's done. If I was to trade in the afternoon, then yeah, I'd come on in the afternoon, reframe stuff, do all that, and that's where you can kind of trade different accounts. But I don't do that. This is enough for me. Like it's enough. Ollie, I love your patience. It's a great learning for me to wait and stick with the plan. I also like that you took profit at your target and be content with it. Yeah, and it takes time. It takes a little bit of time. Like I said, I'm coming up on my 5th year of trading. 1 year, 1, 2, 3, and 4, I was not profitable, like consistently. I got to pay out here and there towards after a few years, but I was not consistent. I was not consistent really until 2024. Like it's whenever going March of 2024. That's when I became really, really consistent. It takes time. Takes time. Yep, no problem, Steve. A train. Oh, okay. You've seen a combo of Apex and take profit. And yeah, as long as all the accounts are Trade Evade accounts, then you can copy them all because you can connect them all in Ninja Trader. But if you have Rhythmic, you can only have one Rhythmic connection in Ninja Trader. So you have one Rhythmic connection, and then a bunch of other Trade Evade connections. That works too. But look here. This is where we created this fair value gap, right? This is what I was talking about. Got this fair value gap right here. Oops. And if you had a stop underneath the middle of the inversion, like you wouldn't want it exactly underneath, like you want to give it a little room because you can see how it wicked down through it a little bit, but look where the bodies are closing. Now, it did close in the lower half of this fair value gap. And it created this one. This bearish one, I think it inverts the bearish one because we still have reasons to go up, but I would be underneath this wick right here, and I'd be watching like to see it. If we take this swing high, that's when I'd move my stop up to the midpoint of this 1 minute because it shouldn't. If it takes this swing high, it shouldn't return down below that, and that's how you kind of manage it and trail it. Yeah, you can do that too, Ali. I don't know how, but I know a lot of prop firms are coming out and trying to figure out how to stop like the IP copying through like Replicanto's IP. I don't know how or what, but I know there a lot of I've seen, I forgot what prop firms were saying that it wasn't Apex. It was a couple other, golly, it's gonna kill me now. A couple of them I saw saying they don't want that to happen, but I don't know. Pete Trader, the best time to trade is mostly the first 1.5 hours most of the time. Yeah, that's why I'm here 1 hour. and the 1.5 I agree with. That's why, like, if by about 10:30 I don't see anything remotely close to shaping out, I'm just done. Now, if it's around 10:30, I'm like, oh, it's just taking its time, but it's doing what I think it should have done. If my framework and everything still aligns, then I'll still be interested after 10:30. But a lot of times that doesn't happen. Bulanox, I don't know if it's Bulanox or Bulanox. I always see it both ways, but yeah, it's them. I think yeah, I think you could be right on that. I've seen them. That rings a bell that they were saying that stuff. All right, y'all, but it is 10:30, so that's my time. Do you now trade half size or shoe size? What? So I don't necessarily. Hey, Richard, good morning. David, to answer your question, I don't necessarily base my contract sizing on the market per se. I base it more on my personal results. So I know how many contracts per, account I should be trading. or like if I'm starting an account or whatever, I know how many my starting contracts that I like, and I'll trade that. Now, if I get in a like say 3-day losing streak, or if I do something dumb and I get into drawdown and they start and my account start going down, that's when personally I'll reduce to half. I'll go to half until I basically get back on track. So I don't know if there's any basketball fans here, but I just refer to basketball a lot. If you're a 3-point shooter and you're shooting and you get a cold streak and you start missing and start missing and start missing, the easiest way to get back on track is to get some easy shots, some layups under the rim, layups or free throws, something easy, easy, easy. And then you're like, all right, I'm back on. I got the hot hand again. Let's start shooting. So that's kind of the way I look at it. If I'm in this losing streak, things are looking bad, and I'm like, oh, what's going on? Is it me, the market? What? I need to figure this out. I reduce my contracts by half and then figure it out. And if I still am doing bad, I'll go down another half. That's the way I do it. And there might be times I'm trading 1 or 2 micros because I need to get back on that track. And once I get back on that track, I don't just go right back to my full size. I jump up that half again, and I jump up that half again. So I'm about to be, and that's what I was debating this morning, or I was thinking I'm at that point now where, okay, I can go back to my normal sizing, but I didn't look over my spreadsheet and everything and my balances just to confirm. So I didn't want to just do it without doing that, which today obviously would have been a great day to do that, but you know. So that's what that's how I look for, or what I look for. Awesome. Yes, sir, Richard. It was a very quick and easy 60 points. Took zero heat on that. We got in at 010.25, which was like right up here. Yeah, I mean that the trade was instantly like 40 ticks into profit, and then it just went up. And you see, I got out at 071.25, which was right here where price just pulled back to. And this is another reason why I just take my profit, because yes, it could have gone up, but if you would be managing the trade how I said to manage it, you would be pretty much taking the same amount of profit as I took, except like been in the trade 15 to 20 minutes longer. And I've seen that a lot of times. But that's also why ICT says to take partials at different areas and have a runner, because it's not always just going to go, right? So anyways, all right, y'all, it is past my time. I appreciate y'all being here as always. Real quick before I go though, everybody, there's going to be a week. I just got the dates. March, let me see. 10th through 14th. So the second week of March, I will not be streaming that whole week, unfortunately. I'll be trading. I won't be streaming because I will be out of town again. We have my son's nationals for basketball. So I won't be streaming that week. I'll post it and I'll keep y'all updated, but I just wanted to put that out there now. So anyways, great job, everybody. Whoever took a trade, whoever was patient, if you had a great day, thank you for being here. Hit that like button. If you're not subscribed, make sure you are. And I'll see y'all tomorrow. If you're going to be trading, as always, trade well. Take care.